Hi everyone, my name's Darryl Panes, CEO at As Good as Gold Australia. And this evening, once again, I'm joined by my brother Brian.
Thank you, Darryl.
At As Good as Gold. And tonight we interview Alasdair Macleod, advisor to As Good as Gold Australia. Good evening, Alasdair.
Good evening, Alisdair.
Good evening, Darryl. Good evening, Brian.
Yeah, look, it's, I must say this time it has been a little while since we've spoken. And I got in the habit of saying there's a lot of water flowing under the bridge since we spoke last, and that is indeed the case. A lot has happened, and gold and silver holders are loving every bit of it at the moment because gold has reached its highest point in recorded history, did so a few weeks ago. It's on a bull run, and silver is performing really well as well. So it's just a wonderful time for precious metals people. So what I wanted to do, expand on that a little bit and just ask Alisdair a question, which we've never sort of done this before, but I'll be intrigued with your answer. Brian and I saw a video going back a month, 6 weeks ago, and there were thousands of people, tens of thousands of Chinese people desperately wanting to buy precious metals. So it was like looking at a football stadium with 100,000 people. They were everywhere desperately attempting to purchase metal. But the problem was, it just takes hours and hours and hours to feed these people through. But as the day was getting on, the store was turning these people away and asking them to come back tomorrow. But tomorrow was the same. You know, they'd all be there again, and towards the end of the day, they'd turn massive numbers away again. I have never seen anything like this before. And I thought to myself, who's behind this marketing ploy? Because here in Australia, we've been busy. And I'm sure all countries around the world would have been busy, but in this industry. But nothing like this. And I thought to myself, you know, you look at mainstream media in this country, no one ever talks about gold. If mainstream media stood up and said, hey, gold has just reached its highest point in recorded history, if they stood up and said, hey, gold's up 850% in the last 22, 23 years, do you think that would make a difference? Yes. You would see people just waiting in massive queues to buy gold. So I'm asking the question here, who is behind, our government doesn't want us to own gold. Gold gives you power, influence, control. They don't want us to have that. That's quite clear. They want to be in control. So, Alisdair, who's marketing gold, silver to the populace at large in China? Because they're doing a wonderful job of it. If you could give me your impressions and feedback on that.
Yeah, absolutely. Well, the short answer is nobody's marketing it in China.
Yeah.
That's the first point. Now, the reason this has arisen is because of circumstances, partly. Bear in mind that China has a savings-driven economy. It's calculated that the rate of savings is, I think in 2022, which was the last figures which I've seen, the savings rate was billed as being 47% of GDP. Now just think about that for a moment. 47% of GDP.
Right.
That's 47% of the equivalent of $18 trillion.
Wow.
So you ask yourself, where do those savings go? Now this savings ratio bit is if you like, it's a sort of calculated number. It's a remainder, a number which is unaccounted for in GDP, basically of income and profits, which are recorded, if you like, in economic statistics, the difference between that and real GDP, because GDP is the spending of the income and profits in the shops on intermediate production, et cetera, et cetera. So 47% of it is not being spent. Therefore, according to the statisticians, it is being saved. So where do those savings go? Well, property, No, that was yesterday's story. Get that. You can't put it abroad because you've got exchange controls. So this is all bottled up a bit. And you've got the stock market. Well, the stock market has risen something like 17% since the beginning of this year. And then there's gold. Now, if you just look at those numbers, 47% of 18 trillion, and just assume that 10% of that is invested in gold, that works out 11,000 tons. 11,000 tons this year, next year, the year after, whatever. Right. So you can see, that there is a huge underlying pressure because investment alternatives are unattractive or less attractive to the Chinese. We have to modify that figure, actually, to be more sensible, to talk about the people who you saw in the video queuing up, ordinary guys queuing up trying to buy, gold marbles and stuff. Household savings work out at considerably less than that because it is part, if you like, of the total savings number. And I calculated that, again, 10% of those, if that was put into physical gold, at current prices, we're looking at 3,000 tons. Now, that is roughly global output. And it means there's nothing left over for central banks to buy, and they're in their buying record buys. There's nothing for anyone else in Asia to buy, like the Indians and, the Saudis and, all the rest of them, the Russians as well. So you can see that, suddenly there is quite an appetite there. Now, on top of that, there is another factor, and that is that while the Chinese are enormous savers, I mean, we're talking about, in this sense, they're taking a long-term view. They are also the maddest punters in the world. I mean, they love to have bets. They love to, sort of speculate, if you like. So, you've got the guys with actual money, thinking, right, where are we going to really make money? What can we bet on? And if they're not betting on the number of lumps in a sugar bowl, they go into the futures exchange and they will buy paper gold and ramp up the prices. And of course, that means that the banking system, the bullion banking system, as it were, ends up short futures on the Shanghai futures exchange, which it has to cover elsewhere. And we see this going through London. We see, in the morning, when there's been sort of big demand overnight in Shanghai, you find that in the run up to and around about the time of the London morning fix, gold is going up, but also it spills into COMEX as well. So you see that, when that opens too. So this is a factor which is not going to go away. I mean, I think this is the point. You've got this underlying demand. And at the same time, I mean, the Chinese individuals, let's say the sort of financially literate or the relatively financially literate Chinese individuals see what the central bank is doing. The central bank is selling dollars. And what does it buy? Does it buy another currency? No, it does it hell is like. It goes out and buys gold because they know the difference between money and credit. And they have a policy of winding down their involvement with dollar credit and, for that matter, euro credit, yen credit, whatever, but particularly dollar credit. So, when people say that the Central Bank of China, the People's Bank of China, is buying gold, they've actually got it the wrong way around. It's not buying gold. What they're doing is they're selling dollars. Now, guys in China who, sort of actually analyze these things and think about it, they understand that. So this is a story, if you like, that is spreading throughout China. Sell dollars. But it's simple. That's what the central bank is doing. And if you want to make money, then, okay, you can't go out and short dollars, in China because you've got exchange control stuff and all the rest of it in the way. But one thing you can do is to buy what the central bank is buying as it sells those dollars. because you can see that the central bank has still got a hell of a lot of dollars to get rid of. And if you look at the government, I mean, they've got something like, I mean, I don't know what the total dollar position is. It's going to be in the trillions. But of that, roughly 700 billion is invested in US treasuries. So they'll be selling those as well. And the idea that the US government can fund itself with the aid of foreigners, that's going away. That's not going to happen. I mean, it really isn't. The largest identifiable holder of US treasuries is a seller of dollars. So they're not going to be buying treasuries. That is for sure. So that, I think, answers your question, Darryl.
Yeah, look, what I find intriguing is that, so Chinese financial education is obviously much better than ours. I was watching TV the other day because I watch a bit of mainstream media just to see what's going on and what they're saying. And there was a lady there by the name of Effie Varhos, who comes across as a very pleasant lady, but she's a financial expert. That's the way she's always introduced. And she has 3 or 4 minutes each day, each morning, to convey a message to the audience. But she never talks about gold, never talks about precious metals. I talk about real estate, stocks, bonds, all that sort of stuff, but never gold. Interestingly enough, she was talking about Mother's Day. And they said, what would you like for a Mother's Day present? You know what she said? Oh, a gram of gold would be nice. First time I've ever heard her mention it. Right. Never when it's financial news, but she'd love it as a present. Now, I don't know. And she went on and told the story as to how much gold had gone up over the last couple of months. And then they started to debate what else could be a good gift on Mother's Day. And she said, no, I mean it. She said, I'd like some gold. And you think, what is going on in this country? I mean, they personally like it for themselves, but don't want to share it. It just blows me away. So
I think, sorry, if I can interrupt, Darryl.
Sure.
There is a problem with mainstream media, and that is...
Absolutely there is.
That they actually impose, they censor, if you like, through editorial. I mean, if someone went on to mainstream media and made the case for gold, I mean, made it sensibly, they would just cut it. I mean, you know, because apart from anything else, mainstream media needs access to government information. Now, a lot of this information is provided in off-the-record briefings. If you are no longer, as a media mogul, a friend of government, you are not invited to these off-the-record briefings. You are cut out.
Yeah.
So, to be fair to mainstream media, the system is imposed upon them, and they don't actually have the freedom to discuss gold and so on in the way in which we do. And this is why so many people are turning away from mainstream media. I mean, they don't necessarily recognize the process by which it's controlled, but they just know that they're being, shot a line, and they would far rather go and watch a movie or watch you and me, I hope.
Yeah. No, strong point.
Strong point.
Yeah.
I'll just add a little bit to our conversation here. So to our audience, we last interviewed Alisdair in late January. And I keep records, and we've got our own graphs and that of the prices of gold and silver over periods of time. And when we interviewed Alisdair last, the price in Australia, the price was around about just $3,050, maybe $3,070 per ounce. And today it's $3,570. It's actually gone up $500 in 4 months. And I will say too, so obviously the Chinese have got something to do with that. But the other thing that I read too is about just before beginning of April, when Russia came out with a statement that they were going to double their supply of gold and dollars and pounds and euros and whatever, exchange currencies, right? But that being said, it was about 2 weeks before gold actually took off like an absolute rocket. And so here we are, 4 months later, that you've got $500 increase in an ounce of gold. I honestly feel by the end of this year, Alisdair, I don't know if you agree, but I think there's a lot of things happening. Not just the United States election, but there's so much debt in the world, and people are just starting to recognise it, that this year, right now, is the time. If you're going to buy gold, buy it now, because you're going to miss out on a tremendous leap in the price. So
Absolutely.
that's what I've heard. That's what I believe, and as I was saying off air to Alisdair, that we've been saving in gold and silver for 25 years, and that means that we believe gold and silver is money, right? It's no good buying it once and think that's going to save you on the day, or save you down the future. You've got to continue to buy it because it's money. You're not buying a asset that is not going to be used anymore. You're buying an asset that you will be using it when the fiat currency goes to zero. All right. Question, Alisdair. Recently, the CEO of JP Morgan, Jamie Dimon, said that Washington faces a global market rebellion over record US debt. Quote, "It is a cliff. We're going 60 miles an hour towards it." What comments can you offer on this quote from Jamie Dimon?
I think I would say that people should listen to what Jamie Dimon says. He is the most powerful commercial banker in the world. And what he says, you need to listen to very, very carefully. So, in the past, I've quoted him equally in support of in support of my analysis. But in his letter to shareholders with the 2023 accounts, which were released, I think, sort of just a week or two ago, he said that he expects volatility in interest rates, and he said they could go to 8% or even more. Now, this is he's also saying stagflation, using those terms, and producing exceptional risks to the bank, and so on and so forth. Now, what he's clearly saying is that interest rates are going to go up, and he is going to try and reduce his exposure to risk. And this is the largest and the most important commercial bank in the world. It is the commercial bank which is the Fed's conduit into the market. Yet we're all sitting here, the majority of us sort of Keynesian economists, saying we face a recession. Okay, we can admit that because you just look at business conditions and all the rest of it, and it's not all that good. I know that GDP figures look sort of better than expected, but basically, things are not all that healthy underneath. We are probably heading into a recession, and that means lower interest rates. No, it doesn't. What it has done in the past is that it has led to a crisis in lending, which requires interest rates to rise unless the central bank comes in and really suppresses rates in order to rescue the banks. And that basically has happened with every recession since the early 1980s. You could just look at the chart of interest rates in the United States, overnight rates or the Fed funds rate, and the St. Louis Fred puts in recession bars and all the rest of it. And every time one of those recession bars is there, the rate is falling. This is because the central bank is suppressing the rates. We're now in a situation where, after decades of suppressing rates, the level of government debt has risen to astronomical levels. They can't suppress the rates anymore. And so, you made a comment about debt. This is the importance of this debt, if you like, in this situation. The central banks have lost control of interest rates. They cannot suppress the rates anymore. Because the whole point about suppressing rates is you want to inject more money into the economy. That's the Keynesian idea, to try and rescue the economy. All you're doing is you are hampering the evolution of the economy, because the point about a recession is that it drives out businesses which are no longer profitable. It reallocates capital to entrepreneurs, if you like, with new ideas, better products, better services. And that way you get economic progress. But of course, economic progress is not something that you can measure. You can only measure the amount of credit being deployed in the economy. So if you puff up the credit, you create the illusion of economic growth. But actually, all that is going into bust industries, which should go bust, but are basically continuing on the lifeline of suppressed interest rates. That is coming to an end. And if you want an example, I mean, well, you can see this in the US, but it's absolutely as clear as anything if you look at the Japanese situation. I mean, and also the Eurozone situation, where the suppression of interest rates took them into negative, into negative overnight money. I mean, it's just absolutely crazy. Now that interest rates are rising, I mean, they've started rising properly in the Eurozone. There are going to be many bankruptcies there, and that's going to threaten to undermine the Eurozone, the Euro system completely, and could even lead to the end of the euro. I mean, I think we're running out of time on fiat currencies anyway, but you can see there is a specific danger which the euro faces. And if you look at the Japanese government, I mean, ever since the stock market crash back in, 1990, 1991, the Japanese government has been running deficits. I mean, occasionally it's been as bad as 10% of GDP, but it probably averages around about 6.5%, maybe even 7% of GDP for all those years, year in, year out. It's a bit less than that now, but don't think that they're getting their books straight. And who owns all this debt? I mean, basically, it's the monetization of that debt, which has been part and parcel of keeping the interest rates suppressed. And the monetization of it has been by the Bank of Japan, which now owns 60% of all Japanese government debt. And they've got a debt to GDP ratio in excess of 250%. I see in the last couple of years, it seems to have declined from about 271%. So I think there's a bit of funny counting going on. But anyway, pass over that. But you can see that that's really a horrendous situation. And we have run out of road when it comes to kicking the can down that road. I mean, it can't be kicked anymore because the debt levels are already unsustainable. If you give it another kick, then really what you're telling the markets is that the debt levels are going to go even higher. And these are for countries, for nations whose currencies are already in debt traps. I mean, this is the problem with the US government. I mean, we were talking just a moment ago about the Chinese, selling dollars. And, who's going to buy all this debt? I mean, if you're going to create more debt, the only buyer out there has got to be the Fed. So that's, so monetizing the debt, what does that do to the dollar? Well, I can tell you one thing. It will accelerate the selling of the dollar. But guess what? Another currency? No, it'll be for gold. And so I think these times it's rather like an inflection point, if you like, as far as precious metals are concerned. I think there's a gradual awakening in foreign markets about the fragility of the Western financial system, the fiat currency system. We were talking about, Chinese individuals maybe not quite realizing that, but there is definitely in China a greater recognition amongst, let's say, the sort of economically literate or the financially literate about the dangers of a debt trap and the problems that the US government are going to have funding that debt, and the alternative being effectively printing the money, which is what happens when you get QE. So, the foreigners are beginning to understand it. And, of course, the last people to understand it are the people living in the countries affected. I mean, the ordinary American doesn't understand it. I have this problem here, talking to people about this thing. I mean, I've almost given up talking to them. But, they just don't grasp the concept that the currency actually has nothing behind it. It is not tied to it. You need to anchor that currency to a value, and that has been the role of money, which is gold, silver, copper, whatever. I mean, but, times it is gold more than the other two. So people in Australia, people in America, they are the last to understand what's happening to their currency. They will hold on to their currency. They will see things going horribly wrong. They will see prices rising, not realizing that it's not the prices of goods rising, but it's the purchasing power of their dollars, their pounds, their euros, their yen going down. This is an education process which only gets resolved over time, effectively. I just hope we can push people along a little bit to be a little bit ahead of the curve and understand what is actually happening in this context.
Yeah, exactly. Just before Darryl does the next question, my point came up when you were talking. We just had a budget here in budget night. It was last night. And our treasurer came up and said, we've done this and we've done this, and everything is going to come to a close where we believe the interest rates will come down. We've got to make sure those interest rates keep on coming down. Oh, lovely to come down, but you cannot come down with a debt level that we've got out there. But here we go. These politicians that think they know how the economy works, and they're looked upon as the god of treasuries and whatever it is. But Alisdair, you said it right, and JP Morgan said it right. Interest rates are going to rise. They're not going to come down. They're going to rise. So watch out, Australians. Don't be careful who you listen to out there. Darryl?
I think Alisdair wanted to... Did you want to pass a comment there, Alisdair?
Well, I agree with that entirely. I'll see if I can put it even more simply. And an economist who tries to manage the economy, if you like, and is basically advising government politicians and, the central bank and all the rest of it. From an economist's point of view, they believe that they can manage the economy. And they believe, therefore, that the response to a recession or a slump, whatever you like to call it, is to lower interest rates because they control interest rates. But you go and talk to a banker, he's got a completely different... And that's the point behind the comments that you brought up from Jamie Dimon and the comments that I brought up about he's said in his letter to shareholders, a banker knows differently. If you're going to ration credit, what happens to the price of the credit? Does it go down? Does it? Hell is like. Who thinks that it can go down? Only a stupid bloody economist can think it goes down. If you're going to ration something, then the price of it goes up. You end up with a shortage. It's as simple as that. And worse than that, when you've got an economy full of zombies, they all scramble for it, because if they don't get anything, and it doesn't matter what the price is, they're going to go bust. They're going to go out of business. And it's the zombies, basically, who the politicians are representing. They don't represent the new businesses. The new businesses, which have yet to start or yet to make an economic impact. They are representing the people who lobby them. These are the big industries. These are the ones who want government subsidies. These are the ones who don't want to face competition. These are the ones who want cheap credit. And what they're doing is they're basically locking up capital resources, labor resources, and deploying them inefficiently. That is really where the problem is in the broad economy, and that is why the politician is not in a position, if you like, to actually understand that he's being shot a line which is completely different from that of the banker. I mean, at this stage of the economy, the bankers in Japan and the bankers let's look at the global systemically important banks. The bankers in Japan and also in the Eurozone have their balance sheets leveraged roughly 20 times. And that means that if they lose 5% of their assets, they wipe out their capital completely. Now, we're seeing this in America with the regional banking crisis, with commercial real estate. The losses on commercial real estate have become completely unmarketable. I mean, it's valueless in effect, because the bankers don't want it. They don't want to take it on their balance sheets. If, let us say, the property company defaults, offices are empty. People are working from home, or they're not working full stop. The whole thing has just gone horribly wrong. All this property was being financed at suppressed interest rates. That suppression is alleviated somewhat, and we've returned to something a bit more realistic. It is going to go higher because, as I point out, the bankers are trying to control their risk, which means that they're going to ration credit. They don't ration it for the government, incidentally, because the regulator says that government debt is the highest form of credit and the least risk. So you have no haircut on that. So all you've got is duration risk. So it all ends up short-term financing for the government. And so they're in the T-bill market, for example, just rolling over 3-month T-bills or 6-month T-bills. Perhaps for a few adventurous banks, they're looking at 1-year T-bills, but they will just go for the maximum yield along that bit of the curve, which really is about 3 or 6 months. And that's the only way governments can fund themselves when it comes to continuing to support the zombies. This is a train wreck rapidly approaching. It really is. I'm always too early on these things, I'll admit that, but I'm finding it very difficult to see how we're going to get out of this year, 2024, intact. And by that, I mean intact with currencies that still have any value left in them. So as to your point about buying gold. Well, I would say, first of all, it's selling Australian dollars. You need to get out of credit and get into real money. I think as a degree of urgency, that is my view. Anyway, looking at everything. So there we are.
Mm. Well, actually, that Alasdair's comments there really stole some of the part. It was what he said there was a response to the next question that I had, because I was going to be talking about commercial real estate exposure and what had happened with New York Community Bank, and the fact that this concern was rippling in, that their exposure crashed shares with the New York Community Bank and was rippling into other US regional banks. And I was going to ask you what this could lead to, but you've spent some time sharing that with us. But if you'd like to expand on it, right?
Well, yes, I will expand on it, because it's not just the commercial real estate entity. I mean, if you look at private equity, all that has worked on balance sheet leverage. I mean, in this country, we've got a running sore with Thames Water. Now, Thames Water was privatized back in the 1980s, and the whole idea of privatization, I mean, the reason we had to do it, in effect, was because these neglected nationalized industries needed capital investment in them, and the government wasn't able to do it. So the idea was to shovel it out into the private sector, regulate it, to, if you like, give a little bit of cover as far as all the socialist commentators and all the rest of it were concerned. But, privatization, which they hated. So what we ended up with was an absolutely ideal business for private equity, because as interest rates came down, what you could do is you could take an income stream from a utility, which was guaranteed by the regulator, incidentally, because the regulator set the profit margin, and he set the profit margin at 8%. Anything over that had to be invested in the infrastructure and all the rest of it. And in terms of the totality of the balance sheet, water prices would be set by the company and the regulator to ensure that there was money to invest, if you like, in maintaining and improving the water system. But you've got a guaranteed slice of 8% profit there. So private equity, what do? Well, you buy the company, don't you? And you buy it with debt, and you leverage it up 5 times. 8% is 40% return on your equity. Wow, isn't this brilliant? Now that works fine until interest rates rise, and that's where we are now. Thames Water can't refinance itself; it's bust. And so, I shouldn't be laughing. It's actually a very serious matter.
Very serious, yeah.
You can see that there is an awful lot of business in this country, in America, presumably in Australia too, where private equity is. I mean, Macquarie is a big operator in the private equity field. These are pigeons coming home to roost. They really are. And then, of course, you've got the wider problem, Darryl, and that is that the bank's collateral and the whole system's collateral is, if you like, financial assets, not only bonds, but equities and so on and so forth. You get rising interest rates. What happens to the values of those? They go down. You end up with equities with a bear market, and that bear market is going to be very severe. Of that, I have absolutely no doubt. As far as bond prices are concerned, they will continue rising. Remember that Jamie Dimon reckoned 8% was possible, or even more. So what does that do to bond prices along the yield curve? I mean, it collapses them in effect. So the whole situation, as far as the financial system is concerned, is turning into one that is virtually impossible to rescue us from without collapsing the currency. So it's not just the real estate, commercial real estate. I mean, in terms of zombie corporations, remember that this sort of zombie problem just increases year after year after year, so long as you get interest rates suppressed. Because the whole idea of suppressing interest rates is so that you don't get unemployment, you don't get businesses going out, you don't get enterprises going out of business, companies, corporations, whatever. That is prevented. And so you've got this huge, great build-up, if you like, of inefficient businesses, which have got to go bust. And the whole collateral that is behind the system is also going to go down in value. I mean, this is a train wreck like we've never seen before.
Wow. Paints a very bleak picture, doesn't it?
It does. And I mean, you and I have been in business, not just with As Good as Gold, but before that, we were in manufacturing, and, we saw the writing on the wall. Here in Australia, we don't have a manufacturing business anymore, especially automotive, simply because of the challenges and the problems that government put their hands into all the time. Wow. Okay, I'm going to do one more question, and then I'm going to hand it back to Darryl. So, Alisdair, now we've talked a lot about gold. We always talk a lot about gold, and then gold is money. We can't emphasize this as much as as we do. Gold is money. But let's talk a little bit about silver. Alisdair, it has been recorded by the Silver Institute that we will see the second highest demand for silver in 2024, this year. And yet the price for 2024 is being bounced around at around about $30 US an ounce. Now, at the moment, my last I saw it about 5 hours ago at about $28.50. But don't you think it should be more around $50 an ounce? And I'll get back to that in a minute. $50 an ounce, considering the demand coming out of India. Now, I recognize that $50 US is just a figure. What's the price of a US dollar? What is the value of a US dollar? Look, in my opinion, an ounce of silver should be, if you want to talk US dollars, should be $250. But let's bring it down to $50. It's reached $50 twice before. They're talking about $30. $30 for an ounce of silver? For crying out loud, that's as cheap as chips. So, considering this and the demand that now you've mentioned in one of your Substack articles, the demand coming out of India is ferocious. I want to know your points here, Alisdair.
I mean, the history of this is that China has been, in my view, controlling the price for a very long time. And I first discovered this when I spoke at a conference in New York. I think it was over 10 years ago now, because there were a lot of silver companies exhibiting at this conference. And so I made a point. I mean, this was at the time that, you had, sort of people who've been following silver and all the rest of it. And, they reckoned that JP Morgan were involved in the suppression of the price, and Blythe Masters, was seen as the evil witch, and all this sort of stuff. And I thought, well, let's, I want to try and get to the bottom of this and understand what's going on, because Blythe Masters, just before this conference, had actually come out and said that JP Morgan did not run principal positions in, other than market making in silver. And yet everybody accused her of being a liar. Now, I know enough about, being in the financial business, that if you're an important person like Blythe Masters, head of the JP Morgan's commodity side at that time, for her to actually stand up and make a lie was completely preposterous. She would not have lied. It is as simple as that. So a question arose as to what actually was JP Morgan's role in this. There was no doubt that they had a role, but what was it? So I went round all the people exhibiting, silver miners exhibiting at this conference, and they all came up with the same response to my question. And that my question basically was, when you have mined the ore, tell me what happens from there. And they said, well, we turn it into doré, which is like sort of, it's sort of on-site crushed, and you end up with something which is probably 80 to 90% silver, and the rest is sort of waste stuff, and it needs then refining. And I said, okay, well, what happens from there? And the answer was that someone from Trafigura or Glencore comes along and makes an assessment, and gives a certificate, if you like, on the silver quantity of the doré. That allows the silver company to raise the funds to pay its expenses. Because obviously, if you're a silver exploration business, you're always it's always hand to mouth, in a sense, and you're looking at cash flows. You really, a mine manager, his responsibility isn't maximizing, isn't sort of hoarding the output or anything like that. His responsibility is quite simple, and that is manage the cash flow of the mine and manage it effectively. So he then needs to fund, because that silver is going to go off. It's going to disappear, go and be refined. It's not going to be marketable until it's refined. So he needs finance. And at that stage, a bank like JP Morgan comes in. Now, I can see working with Trafigura or Glencore, you've got this sort of triangle. You've got producer, you've got assessor, you've got bank. You put those three things together. Now, next question is, where does that silver doré go to be refined? Well, the answer basically, and the mine managers couldn't really answer that one unanimously, but it was quite clear from their responses that the most likely place for it to go was China. China is also a producer of silver. So, in other words, China was using this as a means of building its own stockpile, strategic stockpile, if you like, of silver. And, we can see from the way silver demand has exploded recently that this was a very wise move by the Chinese. But from the Chinese point of view, they wanted to continue to build the stockpile. So their relationship with JP Morgan was to manage the price in such a way that the price was kept down and they could continue to increase their stockpile. So they controlled the price. JP Morgan was acting as an agent for the Chinese government. or the People's Bank. In fact, technically it's the People's Bank, because the People's Bank has, under Chinese law, has a responsibility for gold and silver. Though, J.P. Morgan wasn't taking a principal position in this. It was acting as an agent for the Chinese government, and presumably is still doing so. Now, so you can see that, this has sort of kept gold suppressed silver suppressed relative to gold. And this is reflected in the gold-silver ratio, which I look at the moment, is 82 times. And it has been up briefly to something. When silver fell down to $9 or something, it briefly hit something like 112, 120. So this is, in a sense, it's completely mispriced, which sort of comes on to your point. But of course, this has now changed a bit, because the Indian economy is one that's taken on the running, if you like, in terms of expansion. Things are quieting down in China. China has moved, I think, from the initial stages of economic liberalization. And that's something which now India is benefiting from. Its economy has been growing at a pretty rapid rate, the sort of rate that we saw in China 15, 20 years ago. And part of that, of course, is they get more and more integrated into the global economy, with product being exported to everywhere. And one of the things which they are open to criticism on politically is they continue to open coal-fired power stations, for example. They are doing things which, from the environmentalist point of view, are very destructive for the environment. So they are not ESG compliant. This brings political pressure, if you like, onto India to come up with various means of offsetting this. And one of these is to increase production of photovoltaic cells. And so rather very much under government encouragement and I think subsidy, though I can't swear to that, large Indian businesses, which would be well connected with government, are expanding photovoltaic cell production. And one of the foremost companies is a big conglomerate called Reliance Industries. And it so happened that back in March, they commissioned the first phase of their photovoltaic cell production, which is a 5 gigawatt facility. The total will end up as 20 gigawatts. But, of course, they needed to get hold of the silver. So what do? Well, suddenly you start finding that from January this year, the standing to delivery on COMEX is just going absolutely crazy. And I haven't actually sort of calculated it recently, but something like 1,500 tons of silver has been stood for delivery on COMEX. I mean, this is a huge quantity if you think about it. And I think that this is down to, if you like, these Indian companies like Reliance, who just can't get their silver elsewhere. So what we're seeing is that the control that China has imposed on the silver price for the last 20-odd years is now being eroded. They are now losing control of the silver price because of what India is doing. And this is happening at the same time as China in particular is selling dollars in order to buy gold. And other Asian nations are doing the same. So there's an element of moneyness, if I can invent a word, coming back into silver, which I think could well mean that not only does it outperform gold by, the sort of roughly nearly 2 times, which is the sort of volatility relationship, but I can see it actually having to correct that suppression, if you like, the suppression of price for the last 20-odd years by China. That could be quite dramatic. So anyone who wants to play catch-up with precious metals could well consider using China as the route into gold, if you like. And what I would do under those circumstances is look to buy silver and at some stage, when it has risen significantly, then exchange it for gold, and you will get probably twice as much gold as you would if you just bought gold now. So silver, I think, is exceptionally interesting in that context, but this is an argument for people who know what they're doing, I would say. People who can understand the risks of getting into something which is more volatile. And it is a variation, if you like, on the pure argument that really you should get out of credit and get into gold. Except it's a variation. When you get out of, sort of a basic concept, then you do introduce additional risks, if you like, into what you're doing. But for those who know what they're doing, I think silver is a very, very interesting play.
All I can see is that if you study the markets, if you look at the how many areas that silver is used in all these industries, I think outside of oil, I think it might be the second most used commodity in the world. But for photovoltaic cells, that's where silver is being produced, and India is going to produce a lot of silver panels because they've got to go green. And the other thing is too, India has a population of about just over now China. It's just beaten China for population, about 1.4 billion. 750 or half, around about half, still do not have electricity in their homes. Wow. They don't have electricity in their home. So they're going to use solar panels to produce electricity.
No, I think that's a very good point. I'm sorry. That's a very, very good point. And, there is a wider point behind that. And that is that, the Asian continent, the partners of the Shanghai Cooperation Organization and their extension through BRICS Plus, we've got a whole world which is away from us as the Western Alliance, if I can call, our camp that. There's a whole world there which is rapidly industrializing, and nowhere is this going to be more evident than it is in India.
Yeah, absolutely.
Well, we've got another 45 questions to ask Alisdair, but we would appear to have pretty much run out of time again. But every time, we'll save them for next time.
Yeah, absolutely.
Of course. And the gap won't be as extreme next time, I can assure him, between our interviews. But Alisdair, we constantly refer to a gentleman by the name of Charlie Tremendous Jones. Charlie always used to say, in 5 years' time, you'll be in exactly the same position you're in right now, apart from two things: the people you meet and the books you read. And how accurate is that? Every time we communicate with Alisdair, I think of those comments from Charlie Jones. You just learn so much listening to you in a conversation like this. So what I'd like to do is offer our database, our viewing audience, the opportunity to connect with you, Alisdair, if they could, just so because life is about learning. If you're not smart, you'll go down with the sinking ship. You really will. So you've really got to smarten up and just be aware of what's going on. And Alisdair can feed this information to you probably better than just about anybody in the world. So Alisdair, how could anyone connect with you right now if they want to learn more?
Well, it's for this reason that I set up my Substack channel. So if you Google Macleod Finance Substack, that'll take you to my Substack channel, and you can be a free subscriber. But I would strongly recommend that you become a paid subscriber, because obviously the information which I give paid subscribers is, if you like, more relevant, more detailed than what is available, more timely. What I make available to free subscribers. So it doesn't cost a lot, a couple of Starbucks a month. I don't think many of us would miss. The thing that's fascinating, actually, is that quite a lot of people who subscribe, they use the paying agent comes across cards which have been stolen or whatever. I mean, I just can't imagine this. People using stolen cards to subscribe $100 a year. Look, if you've got a stolen card, I think you can probably go into a shop or something like that and try and get away with it. But to subscribe to a channel really where the whole objective is to protect your wealth, which obviously not if you've gone out and stolen a card. It's glass at me, but anyway. There are sort of one or two fun elements in this journey, as it were. But seriously, I would strongly urge people to really educate themselves. I mean, this is really what we're all about. If part of that is keeping in touch with developments as they occur, and I think the pace of developments is probably going to accelerate rather than decelerate. Then a paid subscription to my Substack, I think, is the best way forward.
Fantastic.
I make a point there, especially to our audience. Yeah, I did register with Alisdair. I mean, it's instead of getting one per week, I'm getting 3 per week. I can't wait for that to come into the computer. Alasdair Macleod, Substack. I'm in there like Flynn. And it's all right, very well, to come to As Good as Gold Australia, and we obviously love the education. We that's what our main forte is. Yes, we obviously love gold and silver, but it's education, and this is what Alisdair does give you with Substack. So I encourage everybody, and we're talking minimum money, $100 US. I think it might have been 150 Australian at the time, whatever. It's cheap as chips. It is so for the information that you can get. Please do sign up with Alasdair Macleod, and you will never look back. Darryl?
Yeah, and as for, just expanding on that a little bit, as for Aussies, those living here in Australia at the moment, we have an event coming up November 23rd. It'll be the Intercontinental in Adelaide. And we've got it, we booked it out, for their main auditorium for 600 people. And Alisdair will be a keynote speaker at that event. I mean, honestly, you just need to be there. You'll get an opportunity to meet Alisdair, connect with him. It's just going to be a sensational event. We haven't got long to wait. And I believe during that 4 or 5 months that we've got to wait, gold and silver are going to be chaotic anyway. So lots to look forward to. I guess just like to finish by mentioning Jim Sinclair. Jim would always say, as much as he disliked the central banking system, he said they're smart. They all own gold. They own gold to protect their position. It's control, it's power, it's influence, it's all of those things. And you need to place yourself in a position where you can achieve all of that for you. Governments hate you owning it. Banks don't like you owning it. They want it, but they don't want you to have it because it gives you control. So just keep that firmly in mind. Gold is a must-have, especially moving forward from here. Thank you, Alisdair. Thank you so much once again for your support. To As Good as Gold Australia, and thank our viewers and subscribers for once again supporting this channel. We're greatly indebted to you. Until next time, stay well, stay focused, and goodbye for now.
Goodbye for now.